The digital transformation has changed financial services in many ways, from mobile payments to P2P lending to robot advisors and so on. No stone is left unturned. But as they said, it has caused certain disruptions in the banking industry. My name is Hinal, and to research more about it, I took a survey and have presented my answers and my views in this presentation. I'll just share my screen. The closing of physical branches has gradually depersonalized the banking experience. I strongly agree to this statement. As you can see the graph, 32% of customers who bank each day at their branch of choice will also wait in the line to see a teller rather than handle all their businesses in an ATM. This is a powerful demonstration of the human interactions, with nearly a third of the banking customers wanting to have a relationship with any banking professional. Customers are looking for financial advice that goes beyond just a recommendation on an account, card, or investment. They are looking for someone who will dive deep and understand their unique circumstances and will offer them a personalized guidance or advice. And more often than that, they want all the conversation to happen face to face. So, yes, the closing of physical branches has certainly depersonalized the banking experience. This question, it asked that if the the new set of services of mobile services has raised consumer expectations with other services and has impacted negatively on customer satisfactions with the traditional banking reality. And yes, it has certainly did that. The recent study shows that people are shifting towards digital banking as they have realized that they have better options and satisfaction while things are on when things are online compared to traditional banking. Also, use of blockchain in digital banking has made quite feasible to store customer data in the institution so that even if my relationship manager is for any reason not available in the branch, there would be someone who will know my history and who will have my information and would still be able to help me in an effective way. That's it from my side. Thank you.
So first of all, I would like to say that I have just sent $500 to India within 4 minutes, and it costed me around $3. So this was unimaginable when there was a traditional banking, but now due to fintechs, everything is possible. And this is the power of fintechs and digital disruptions. So first of all, I would like to share my screen, and the first reason I would like to discuss is coronavirus-led disruption. So as you can see, as per one of the studies, 34% of customers feel comfortable now depositing money in a digital bank. And this was the data, the sample size was 17,600 people within 30 countries. And you can see the net percentage change in channel usage during COVID-19 period. So as we know that who has advised people to use contactless payment so that they can avoid handling banknotes as much as possible, which were the carrier of coronavirus. Other than that, there were so many institutions took other steps to avoid spreading of virus, and Center of Disease Control and Prevention also advised to the banks and financial institutions that people who are visiting banks or any financial institutions should maintain the distance of 6 feet, which is not so easy to maintain. And other than that, elderly consumers and consumers with pre-existing illness were very less likely to visit physical branches. So all these reasons have accelerated the usage of digital banking and payment options and have adversely affected the traditional banking habits of a consumer. Other than that, privacy policy caused by GDPR. So in terms of GDPR, while complying with the GDPR, Banking institutions have a large quantity of personal data or personal information to handle, and for that they need to step up their manpower and invest in new IT products. They also have to comply with KYC guidelines to safeguard themselves from money laundering. And the data they are trying to access is not very easy because of the legacy IT systems. There are so many patchworks, and it is not easy to use them. Uh, and opposite to this, the new fintechs have the advanced technology and new legacy system with very scalable storage, cloud, and everything. Because of that, they are able to provide like the same services of traditional banks in half of the cost.
Hi, this is Suleiman, and I will present the impact of technology, fintech, and consumer perception in the future of banking. Technology has always been the main reason behind the development of banking services. The exponential advancement in the performance of this technology and infrastructure lead to change in the way financial services providers offer their products. So as a result of the emergence of new technologies such as smartphone, 4G, and social media, and AI, technology companies have both recognized a huge opportunities presented by technologies such as artificial intelligence. This potential innovation that AI can unlock are just beginning and will be significant area of competition between banks in the coming years. So future banking will be invisible, connected, insight-driven, and proposalful. The drives of the future are evaluating of the past. Some are playing out now, such as blockchain. Other will be far more prominent with time, such as open banking. Distribution models are evaluating to make use of the marketplace and technology such as APIs. So in digital area, consumer perception is also the center of change. This means consumers have more power and insight into their financial institution have ever before. They are relying less on advisors and experts and are doing more to take control of their own budget. Finally, banks will pivot fully to become the platform and rails that other firms run upon. Large banks will be consist that teach tightness for consumer primary and engagement. And some will do both. Technology and fintech will only keep improving and getting more advanced. The main winner will be always customers. After all, the main goal of technology implementation is to make client lives easier. Thank you.
Hello everyone, I am Jarpa Ben Patel. Here I am going to explain about few questions which I have taken from SurveyMonkey website. Now my first question is the perception of the transparency and accountability of the global financial industry by the regular consumers was eroded after the 2008 financial crisis in the US. Personally, I agree with these statements. And also you can observe from the right hand side diagram what the situation happens during this crisis. So banks are facing increased competition in attracting talent through the plethora of the new and upcoming sectors, which offer highly competitive compensations. So it's very tough time for banks. Now the second question is the drastic improvement in the performance of four distinguished technology and infrastructure elements has combined to force a change in the way financial services providers offer their products. Mobile banking, highly capable smartphone, 4G mobile connectivity, and social media. So I personally agree with these statements because nowadays everyone is using these technologies. Now, first of all, is the mobile banking, which is useful for making deposits, account transfers, monitor their spending and earning. Other one is smartphone. So 79% of smartphones owners have used their devices for an online purchase in the past 6 months. And we also observe these things and we personally use these things. The total volume of payments made using mobile devices reached $503 billion in 2020. Now the 4G connectivity. So 4G connectivity is useful for any network. Easy to operate banking IoT based applications, which is very useful for every common person. Now the social media. Social media is very useful for many ways in banking sector, like the strengthen relationship, humanize your brand, reduces effort and cost, provide the digital customer service. Now, my last question is, technology has allowed the new fintech entries in the industry and how they impact on the banks. So I personally strongly agree with this statement because we can also observe everything which is based on the fintechs, and fintech offer mainly better services, specialized fintech companies, better branding and cheaper prices. So fintech banks are good for us.